Today, I want to talk about how a number of big banks are failing and how the SEC is trying to prevent an all-out collapse. I also want to talk about a number of meme ETFs that are closing down over the next few weeks and what might happen to those shorts shorting those ETFs. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, we know of a bunch of banks like UBS, Citibank and Wells Fargo that are struggling right now. These banks are closing offices, shutting branches and laying off staff, all to cut costs and desperately try and get more cash through the door. That's because these banks are likely already insolvent. Just Theyre tweeted explaining which banks are at risk of going bust in a liquidity crisis because they're already ridiculously insolvent. He's looked at the current loan to deposit ratio, the loan and held to maturity securities against the deposit ratio, and also the loan, held to maturity securities and available for sale assets against the deposit ratio. What these ratios are doing is looking at how much of the bank's cash is tied up in risky loans that have been given out that have likely already taken on significant losses, and how much or how little cash could fall due to withdrawals before those loans have to be sold and those losses recognised. So you can see straight off the bat a number of UK and European banks are very high up on the chart for having tons of money tied up in risky loans. Obviously, high up on there is UBS that currently has 85% of their total deposits tied up in loans. We've also got banks that we know are struggling like Deutsche Bank, Truist Financial, PNC, US Bankcorp and a number of others, including Wells Fargo, that are very high up on the list too. And especially when you start including those held to maturity securities, more than all of their cash is currently tied up in these loans. And if these loans even took on fairly small losses like 7.5% losses on loans and 20% losses on held to maturity assets, those losses that are realised could be well into the hundreds of billions of dollars. And especially for banks like Deutsche Bank, Charles Schwab and Goldman Sachs, those losses would exceed their current equity and the bank would be insolvent and collapse. And Unusual Wells has tweeted saying the SEC has just adopted a financial crisis-inspired rule barring traders in asset-backed securities from betting against the same assets they sell to investors. Now this is actually really interesting because it means the SEC is already seeing banks and institutions betting against the same assets they're selling to investors. These banks that are currently holding those risky assets on their books, those held to maturity securities and some of those risky loans, as soon as these banks are shifting those loans off their books, they're then betting against them. Clearly these banks are well aware of what's about to happen in the markets and just how much of a market crash we're about to experience. And the SEC is trying to prevent an all-out market crash by trying to stop these banks from betting against the very products they're desperate to sell. So that not only tells us that banks are up to their usual no-goodery and trying to bet against assets they're selling, but it also means the SEC and these banks are well aware of the coming crash. Obviously, as you can imagine, Commissioner Hester Peirce voted against these rulings because for hedge funds, betting against products they're desperately trying to sell usually makes them money. But it will be very interesting to see what happens to these banks over the next few months, especially as conditions are getting tighter, and especially as a major Chinese shadow bank has just declared itself severely insolvent. Because as we all know, when these banks end up crashing and the market ends up falling, many of these hedge funds will be liquidated on their long positions and also forced to close out of their shorts. I also wanted to give another shout out to JJ, who you may remember a few days ago made $90 in 30 seconds in his first day in the Millionaire Mindset trading group. Yesterday he managed to expand on that and make another $138 on top of that in just his second day in the group. Today we also had Moses making a quick $50 and Icon also making an additional 7% on his entire account. There's also just 2 final days for the Thanksgiving sale remaining where you can currently get 5 weeks for the price of 4. So guys, be sure to join the Millionaire Mindset trading group linked in the description below. I want to explain how we know these hedge funds, or more hedge funds considering at least 10 or 20 of them have already gone bankrupt. I want to explain how we know more of them will go bankrupt, but first let's talk about this shadow Chinese bank. It says China's major shadow bank, Zhongxi, declares severe insolvency with a $36 billion shortfall. Known for real estate investments, the bank attributes the deficit to internal management issues facing operational risks. Now that further highlights the instability in China's real estate market and in China in general. We know of all of those property builders like Evergrande going under and defaulting on their debts and defaulting on their loans too, or bonds as well, meaning those bonds and loans are all worthless. Which, as I said, just means that more and more US banks are going to be taking on these significant losses, and at some point won't have the cash to pay out to those depositors. And when that happens and the bank goes insolvent, it will end with more bank bankruptcies. But let's also talk about how more of these hedge funds will be going bankrupt. Many out there think that these hedge funds simply won't be margin called or simply don't get margin called. But as Lionvest tweeted, he said if hedge funds control the price and the wider market, then why in recent weeks have they lost over $40 billion? If these hedge funds could at all point control their losses, why are they taking losses, not just making profits every single day? And why would Biotech Moose have an entire wall full of hedge funds that have recently defaulted and gone bankrupt and been forced to close out of all of their positions? Or I guess more specifically, either being forced to close out of those positions or transfer them to a larger hedge fund willing to take on the risk. The number of hedge funds available to take on this risk is dwindling, and it won't be long until it's either Citadel or no one. And then when Citadel goes under too, the squeeze will happen. And on top of that, the crazy lady trader tweeted saying CNBC just said this meme ETF is going to cease to exist next month. Saying, of course, this message came with the vibe that it was and that it is over. Now, it's going to be really interesting to see what happens to the shorts in these ETFs when these ETFs are delisted. As I explained previously, many of these hedge funds aren't shorting stocks directly anymore. Instead of shorting AMC, they're shorting meme ETFs, AMC ETFs, and ETFs that contain AMC too. So either these hedge funds are going to have to figure out a new way to short AMC, or all of a sudden we're going to see a massive amount of short interest and FTDs flooding back to AMC specifically. Those FTDs and that short interest will just be transferring from these ETFs to AMC. It won't impact the price, it's more of just a data presentation change. Lucrative Lou tweeted saying ETFs are funny instruments and they're almost like liquidity fairies, and he's looking forward to see how they unwind them. And finally, I also wanted to talk about the massive increase in Shi comments that I've seen not just on Twitter, but in my YouTube comments too. I've seen a massive increase in not just the number of Shi comments, but also the comments that are blaming Adam Aaron specifically for these illegal hedge funds and their crimes. They're not blaming the SEC, they're pinning the entire blame of these illegal hedge funds and their actions on Adam Aaron, saying that Adam Aaron needs to be removed from the board. I've said before I don't agree with Adam Aaron continuing to dilute the stock, especially now that AMC is cash sufficient, but every other idea Adam Aaron has had has been brilliant in improving the business. And as IC Assistants tweeted, he said the short's sole goal now is to try and get Adam Aaron removed from the board and replace him with a hedge fund insider to bankrupt AMC. It's evident Adam Aaron will not let AMC go bankrupt and is doing everything he possibly can to improve profitability and revenues. The shorts have finally realised they will not be able to shake the apes from the tree, and their only possibility to win is to get Adam Aaron removed, replace him with a hedge fund plant, and bankrupt AMC. And as Robert tweeted, he said if the bears and the shills are here en masse, more than we've ever seen before, that means only one thing, which is that we're closer than ever. We always said when more shills and more bears and more shorts start appearing left, right and centre, that's when we're really getting close to the squeeze. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.